Today we're talking about iRobot here on Everything Money. It's Seth, Paul, and Mo. We analyze financials of companies. We like to look at the financials both of what they're making and how this translates into their stock price, if they're in line, if they're undervalued. Want to buy if they're undervalued. This stock's been all over the place, Paul. It's an interesting company. It is the future, Paul. This is the future. You've owned a Roomba, have I? I have a couple. They both break, and I just don't get a new one. But
that's the same with us. Do you buy the good ones or the crappy ones?
One was like $500.
Oh wow, that's a good one.
My wife's folks bought like the $900 version that like scans the whole house. They love it, but either way,
You also have 2 kids running around, plus other friends come over 18 times a day.
So in any case, we will use our 8-pillar analysis to look at the health of this company, see if it translates into stock price. We will also head over to Mo, the leader of the Bid and Ask Nation, to see if people are trading this. And Mo, I'm guessing they are with these ups and downs. We will take a look at the engulfing candlesticks that Mo presents. But at first, we will head over to Paul. Paul, what are your thoughts on iRobot?
All right, guys. So first off, follow us on Instagram. It helps us out a lot, makes us feel warm and fuzzy inside. So iRobot is a company that a while ago I was interested in. So we'll look at the numbers more in further detail. It's a $2.2 billion company. 5-year PE, we want less than 22.5, but it's actually 27, so that's an X.
Well, we're close, though. I mean,
we're not terribly off, correct? 5-year return on invested capital of 10%. That's a check mark. We want over 9%.
This is pillar number 2, folks.
No dividends, and free cash flow over the last 5 years, average of about 90 million, but last year they did 170. I'd make the argument that probably last year people at home a lot. They might have bought more things to make their home nice and tidy, etc. So look at this. Let's look at this income statement. Bless you.
Yeah, pillar number 3 is revenue growth over the past 5 years, Paul.
730 million to
wow.
1.6 billion.
Jeez,
check mark there.
Whoops.
Check. But look at last year. It was 730, 975, 1.15, 1.2, jumped to 1.6. I think you got to factor in there as being cautious. Net income.
Pillar number 4.
57 million, 111 million, almost doubled.
Wow.
Check mark there.
Very nice. Shares outstanding. You want this number going down, Paul. You know this.
Slightly increased, 27.5 to 28. It's an X, not terrible. That could have been just from people executing their options along the way, because if you look below, the average diluted shares outstanding, this factors in all options that can be granted. It's at maximum number right here, but so that could have been the only reason why it happened, not necessarily the company just issuing more shares for their own reasons.
If this is the first time you've ever actually looked at financials of a company, we welcome you in. If you've just always bought a stock maybe and hoped it went up, this is a new way of like analyzing, and we enjoy this, Paul. This is the only way for you, but you can grasp this even better by having our software, the software that Paul's using right now, both the charts, the stock analyzer tool, and guidance from Mo and our Bid and Ask Nation. Click the link below, go to everythingmoney.com, and you can get this. Paul, tell them what they get.
Guys, mobile app, all of this on a mobile app, 8 pillars, 30 years of financial data, stock analyzer tool, 1 to 2 videos, exclusive content per day, access to us. Biggest thing, Discord community, over 6,000 people have access to this who bought our software. Join them. 87 cents a day, guys. Less than a cup of coffee, less than a crappy cup of coffee. Our competitors are $235 a month. We're 87 cents a day. I can guarantee you, if you follow the process, this will pay off to hundreds of thousands, if not millions, in retirement. It's going to happen as long as you follow the right process. So,
pillar number 6 is total long-term liabilities divided by free cash flow, Paul.
So, guys, companies that have less debt are less likely to go bankrupt, right? It makes perfect sense. If you and your friend both make the same amount of money, but if that person has 10 times more debt than you do, who's more likely to go bankrupt?
Of course.
So what I've decided to do is I've decided to take the 5-year average free cash flow, multiply it by 5. That equals here $440 million. I want to see their long-term liabilities less than $440 million. So we go to the balance sheet. And on the balance sheet, we scroll to the very bottom. Long-term liabilities are $69 million.
Oh my gosh.
They can pay off all their long-term liabilities in like 9 months. It's going to be very difficult for iRobot to go bankrupt with this kind of number. Doesn't mean it's impossible, but it'll be very difficult.
Someone's starting your moped outside, Paul. I hear it.
Yeah.
They're trying to
My
steal
moped's
it.
electric, thank you.
Yes. Free cash flow is pillar number 7. Go for it.
Okay, so free cash flow, guys, is cash from operations, less your capital expenditures. I prefer free cash flow to net income. It's harder to manipulate. Went from 94 million to 171 million. Check mark there. The average, 88 million. For our value, we're going to multiply it by 20. and that's $1.76 billion. They're currently a $2.2 billion company.
Yes.
That is an X. So in this situation, I think it's just a matter of we have to go in the stock analyzer tool because if they have a lot of growth, but I do think that the future of companies like this is very good, right? Like, yes, the technology might not be the best right now, but imagine the technology in 5 or 10 years. Like, I wish I could have a robot cutting my grass. Yes. I want to get there at some point. Why? I have dogs that I love, and I don't want them to have any gates open. I'd rather just buy I have a big piece of land, I'd rather buy 2 or 3 of them, put them in certain areas. At night while I'm sleeping, the thing is cutting my grass. I'm not worrying about it. I'm not worrying about my dogs. I sleep soundly. My grass gets cut. My dog stays safe. So for a guy like me, I would buy this all day.
It exists.
Yeah, but I think the technology is still getting better and better, right?
Yeah, it exists. And even with the Roombas, I mean, they're supposed to they're supposed to go back to their base charge and go back out. It doesn't always happen. It's supposed to. It just doesn't always happen. But what does happen is Mo gets after with the Bidnass Nation and trading those engulfing candlesticks that you love. Oops, I hit the wrong drop, Mo. But go ahead and get after what people are doing trading wise.
So this thing is really, I mean, since they got short squeezed back, I don't know how long ago that was, you can just see the decline that they've had. That gap has already filled with those 2 little days right there. So the tough part about a stock like this is the volume is less than 1 million shares traded per day. Now the good part about this specific stock is there's not a lot of volatility. Usually less volume means more volatility, but that's not the case. So it's just a dog stock. If you want to throw it on a watch list, maybe it'll pop up into the sweet spot for you. The issue that they're going to have that they've had for quite some time is they're under all 4 major moving averages. And that doesn't seem like it's going to change anytime soon. They're going to need a lot more volume than this and a lot more consistent volume over the next several months to get through those moving averages. So this is a tough one to trade. Absolutely a tough one. But I think you should play. I mean, I don't know. We're going to put it in stock analyzer. This to me is way more of a value play than anything.
Yeah,
if it even qualifies for a value.
If so, we're going to see.
I like when you say that, Mo. Paul, let's show them the stock analyzer tool.
All right, so guys, I'm doing a 7-year analysis on iRobot. Their revenue growth has actually increased over the last 10 years. Again, my job is to be conservative. This is one of the ones I'm actually hardest on because like I just said, once the technology gets better and better, I think the momentum of sales will increase and increase and increase. Because the one thing about technology is, as technology gets better, prices also go down, right? The first iPod was how much money? Back 20-some years ago, it was probably $150, $200, right? Something like that.
Oh, they were like $400.
Originally?
Yeah.
Now look, an expensive iPad, like an iPad for your kid just stepped on one. How much are you gonna replace it
even the
for?
biggest, best one's like $1,000.
Yeah, exactly, the iPad Pro.
It's incredible.
So I look at this saying, I think revenue will be able to increase quite significantly. I made these assumptions, guys. Look on the screen for it. I'm starting conservatively. I hit the analyze button. The stock's currently at $79. And based on my highest assumptions, it's a buy right now. And it's not far off from my middle one. We're not far off from buying this based on my middle assumptions. Maybe wait for a 10% pullback. So this isn't terribly far off, guys. Even with our lowest assumptions, we're 10% away from that as well based on discounted cash flow. So what does that mean? Don't jump to it. Does that mean maybe you start a position here if you want to? I'm selling puts. I'd probably sell puts on it, which means I'm going to sell somebody the right to put the shares for me at a certain price. That way I get the price I want and I'm paid to do so. These are all part of your options, but I wouldn't put this as a big part of your portfolio because it's a speculative play. Because this is technology. Anything can happen. I mean, Apple's doing self-driving cars. I don't think it's unreasonable for Apple to go, oh, you know what? We want everybody on the same thing. Now, granted, what could Apple do? They could buy iRobot.
Yeah.
It's a $2 billion company. They have $80 billion, $90 billion a year of free cash flow. Maybe they buy. I think iRobot might be a good acquisition for the future for some company who likes the technology and says, listen, we just want to get in the market. Let's go with it.
Probably an Amazon or Apple. Yeah.
Because, Apple, Google, Amazon.
And the only reason I say specifically Amazon and Apple is because they're so into this home kit, home this,
well,
home that.
Google.
Are they?
I mean, they're trying to.
They are trying, but it's not as much as Amazon and Apple.
I think Amazon and Apple are the leaders in that stuff.
Yeah,
but even then, so I just look at it saying, guys, be cautious, but this could be a very good acquisition play. And for some reason, both times I've mentioned acquisition plays, they've panned out. I'm not saying this is going to happen, but literally, like both times I mentioned, that's going to be a good acquisition. Now, all of a sudden, months
everybody's
later.
going to buy iRobot right now.
Do not buy iRobot right now just as that.
If you made it this far in the video, congrats. I have the treat of sitting here and learning from these two cats. They've drastically changed my thought process about investing. And if you keep watching all the videos we do, like 17 videos a week, it's bonkers. You can start changing your mindset and getting towards some of these better investments.
Onkers.
That's our take on iRobot, on the vacuums, and join the Everything Money community below, and you can be fondled by Paul. Aggressively, I assume.
I'd like to aggressively fondle a lot of things, but fondle our Instagram account so you can join us, follow us on Instagram.
Aggressively fondle?
I mean, is there another way?
Well, you can caress.
Caress, okay. You can show me the differences later.
We'll
At lunch.
We'll do. Thanks for watching. Tickle the thumbs up. I love you guys. See you.